Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Alain Corbani, head of mining and portfolio manager at Mount Blue Finance, and he's the head of the Global Gold and Precious Fund. Alain, how are you?
I'm good. Thank you very much, Ivan.
You know,
Always good to be able to exchange with you.
yeah, it's so great to have you come down to Wall Street Silver. It's a new year, 2025,
Yes.
and I wanted to get you on to talk about everything that's happening in the silver and gold and mining sector. First, let's start off with, with silver and gold in general. Where do you think we're heading in 2025?
Good question. I think that there's a lot of unknown, but not for us. A lot of questions are being asked, and really, this is something we don't understand. Is there is so much doubt in this market? There was so much doubt in 2024. There were doubts in 2023, and there are still a lot of doubts about 2025. But it's the same story. It's really the same story. It's a story of an economy that is weakening. It's about an economy that has a lot of debt. It's about consumers who are suffering, and it's about rates which are extremely too high.
Right.
And the only direction for those rates is to go down and not to go up or to remain at these levels. But it's a very uh, challenging statement to make because there are a lot of doubts in this market.
And you see a lot of people I've been talking to recently, they're absolutely expecting rates to go down. With Donald Trump becoming president, he's really pushing for lower rates. But lower rates is you're going to see more easy money and you're going to see possibly a weaker US dollar and higher precious metals. Do you take that same stance that if they lower rates, lower US dollar, and it'll be higher precious metals prices? What do you think about that?
This is a simple and perfect equation, and I totally agree with it. But but back to it's always about. I took the analogy of a cake. When you are baking a cake,
Uh-huh.
you expect it to be better with the same ingredients.
Right, right.
But do you or you don't?
No, it's gonna be if it's the same ingredients, no.
Exactly. And we don't have different ingredients. The ingredients are well known, and we
Right.
know their mm, capacity to generate growth. So we need a lower dollar to generate growth, and we need lower rates to generate demand. It's as simple as that. And people are thinking that a new Donald Trump term will provide more growth and more inflation, but uh, it's not really exactly what happened in his first term.
Right.
And the only person who saved the economy in 2019 from a recession was the chairman of the Fed, Jerome Powell.
Right.
So we expect the same thing to happen,
You,
literally the same thing.
yeah, just gonna see Jerome Powell come in, lower rates, more easy money. And
But this is a theme that is hard to attract a lot of tailwind. We don't have that theme in place now, and that's why you have, for the last 2 months, you've had some doubt and a correction in the price of silver and gold.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
It's because suddenly the market started to postpone future cut in rates, and this is exactly, and we disagree with that scenario. But again, the reality is that if you look at the futures market, at the options, and it's true that for now the market only discounts one cut in 2025, and
Right.
we believe that there will be a big surprise on this front.
Absolutely. Now, a lot of people who are new to Wall Street Silver since we've last talked, there's so many new silver and gold stackers. There's even younger people who are getting into the market. Just they want to protect their purchasing power and they want to, in general, just save a little bit more in 2025. What would you say to the new silver and gold investors? And can you give them a little bit of background about your history in the silver and gold sector?
Uh, so first of all, when you're not a specialist, you diversify.
Right.
Period. You need to diversify, and if you have a strong conviction uh, for silver, for precious metals, gold, or whatever, you need to spend a lot of time and learn. And learning is a long process. It's a lifetime process.
Yeah.
But when the sector is so volatile, the silver sector is ultra volatile. The gold miners are very volatile. So you need to proceed with caution. And the only way to proceed with caution is to diversify. And knowing that you will have a an abnormally high volatility in the silver sector, higher than in the gold sector. So if you want to reduce your volatility, you increase your exposure to gold mines or gold, physical gold.
Hmm.
And if you want to add more volatility to a sector that is already extremely volatile, you add silver.
Yeah, absolutely. Now, when did you first start getting into silver and gold sector? What was your
Oh,
first introduction?
that goes back to 33 years ago,
Wow.
33 years ago. I had just graduated from university, and my job was a job as an analyst uh, for the biggest Canadian investment bank at the
Wow.
time, and I didn't know anything about mining, and if you wanted to cover actors, Canadian actors, and sell those Canadian actors to the international investors, professional investors community, well, the only thing that was really at the time very sellable was the mining sector, and this is exactly what I did, and it's something that I never
You never looked back.
regretted. No, and it's a fabulous sector, but it's not for everybody.
Yeah, of course. Can you explain to our audience, to the new people in the mining sector, I guess, what's the difference between an exploration mining company and what's the difference between someone that's actually, producing and what's the risk factors in both?
So an exploration company by nature doesn't have any revenues,
Right.
and by nature it will have to come to the market on a regular basis to raise some money to finance this exploration. So there is an additional risk in an exploration company of dilution,
Right.
more equities being issued, more shares being floated, therefore dilution. An exploration company, that's the downside of an exploration company, or the nature, the real nature of this company. But the upside is that with drilling, with exploration, they can make a discovery. And
Absolutely.
if they make a discovery, the reward can be significant. So a producing company has a very different profile. By nature, a producing company generates revenues. So we definitely can have a look at its income statement, at its financials, at its balance sheet, and we can value this company based on its profitability and a growth profile in production or revenues or debt all the items that are linked to the balance sheet or income statement. But a producing company has an additional risk, which is linked to the execution
Right.
of mining. So, uh, but again, the valuations are the approach of valuating them is very different, and the risks are different but significant in both cases.
So there's risk in both, but it just depends on how high your tolerant risk is for an explorer compared to a producer.
Exactly, because an explorer might never discover anything, right?
Right.
And a producer might be facing higher costs and profitability that is being challenged, and probably having to raise equity too to finance a new growth project and so forth. Uh, it's very interesting. It's very the profiles are very different,
Very
but
different.
ultimately it's you're down to the risk reward
And
profile.
and
Uh,
what do you look at before you even look at a producer explorer? Do you look at the team, their history? What do you look at personally?
Yes, I mean, I'm not going to be very original here. You need to know the people, you need to
Right.
know their background, you need to know what their successes, and the failures, because you learn also from your failures. So,
Yeah.
uh, knowing the assets they had to manage, how they did with these assets, if these were producing assets, the ultimate outcome of the companies that they were heading. I mean, all these are questions, normal questions that we need to know, and this is part of the due diligence process that is so natural for
Right.
us. But besides the people, there is the asset, the nature of the asset, the location, the the grade, the profitability, the capital cost, if you need to bring it into production, the equity required to finance this growth, and so forth. So first the people, and then the asset, because what you should remember, what the audience should remember, is that you can have a poor asset and still make generate some revenues and profitability with a absolute pristine executive team,
Right.
but but you can have a very different outcome with an outstanding asset and a poor executive team. So
It's how you
ideally
execute.
you want to have both sides working in your favor.
Yeah, absolutely. Now, before you go, Elaine, where can people connect with you? Where can people follow your work?
Well, the best thing to do is to go to our website. The website is montbleufinance.fr, and please ask any questions you want. We'll be very happy to respond.
Yeah, no, everyone watching, I highly recommend. Please go check out everything that they're doing. I'm going to put the links in the description below. And Alan, before you leave, what are your last words for the silver and gold stackers out there, the investors out there?
Uh, I think that we are going to be facing a short-term volatility.
Okay.
Uh, and one specific example is the number of short positions that were built in less than a month on the silver ETF.
Okay.
These positions has more than doubled in a month. So, and probably they will have to unwind, but expect volatility in the short term because the market needs to have more visibility. And once we get this visibility, and we'll get it, it will be a smooth ride towards probably 30 plus $35 the ounce of silver, and 3,000 the price of gold.
Wow, yeah, that's a really good call. But Alan, I want to thank you so much for coming down to Wall Street Silver. Every time you come down, it's a breath of fresh air, and it's so nice to have you down. But yeah, thank you so much for joining us.
It's my pleasure.
Awesome. Talk to you soon.
Okay, well, bye bye.